Hi, everyone. My name is Anne-Marie Band. Today's Tuesday, April the 16th, and this is the Moneyball Morning Report for the Benzinga Pro platform. I wanted to start with oil because I think it's a very important thing to look at. And the reason that I think it's important to look at is because this is when sabers start rattling on the other side of the pond and all of this rhetoric gets very, very noisy, the assets that are deemed at risk begin to rise. Oil should be one of those assets. It is not rising. Now, it's nice that it's coming in because I don't want to pay $5 a gallon for my premium fuel, but a lot of folks are looking to buy these bounces. Take a look. See the wicks? The bounces off of the fades into deep support are fantastic, but you do not want to buy a breakout here. All right, if we look at Dolby, Nick Dolby, who's on Top Step TV, he has got a wonderful, very simplistic trading system that looks at ranges within a trend. And so let's pop that up right now. We're looking at a 15-minute chart. And this is a range trade that he would take up here, he would short, and then down here, he would take some profit and move off. I absolutely love this. I'll be making a strategy card for this one, but this was an ideal formation. I want to give him props because it is a very simplistic trade and it's absolutely beautiful. So props to you, Nick. And let's move onward. Nick believes the chart is going to be more bullish than I believe at this juncture. I'm looking for this S-curve test to watch real buyers engage in the longer term. The levels I'm looking at, we know what they are, 83.72. It's really battling right now at around 84.60. That's going to be the fly in the ointment for now. And of course, using his trading system, it absolutely tells you that it's a space to take some profit in that range. All right, let's go to gold. I'm giving my Top Step guys lots of props today, and another one of the folks who's really been carving up gold is Eddie Horn. I haven't talked to Eddie about his particular strategy event here, but this is another one of those risk products that should be screaming higher if there is real fear in the market. And it is not. It is not. And so the one thing that's moving, and I'll talk about that one in just a little bit, is the near-term bond in terms of yields. But we will take a look at that. I think that's more of a currency event than anything else. But have a look. It came right into this prior high, folks, and just collapsed. So let's take a look. Again, we're highlighting Dolby today. I'm going to remove this ray. And I'm going to remove the line. I'm going to put another marker here from a daily perspective. And I'm going to look at the next tests of price action that move across this zone, right? The opening tick, notice, we are well under the close of the prior day. We are inside of the body of that prior day. And the opening tick should give us an area where the traders go, do I need to buy there? Or can I watch for the bounce that fails the I'm going to draw another line because things are we are looking at really right at the peak of the turnaround. I'm putting the alert on this line because this is the bounce zone. If we get above this, we are going to see more buyers in the fray. If we stay below it, we're going to see sellers re-engage. Let's go back to that 15-minute chart. Whoa, let's use 30. We still got a lot of barcoding here. Wow. Let's look at the 4-hour formation. Very sticky. No good frameworks here. Let's see. I like this box right here. Okay, so we hold this box. Things look fine. For upside pressure, we lose the box. We go to the bottom of the range. All right, so I'm going to create an alert at this line. We want to watch a breakthrough, holder test, and that will give us our broad motion. My thought is that we are coming right in and very likely might sit at this 2301 movement. What I do see that's giving us a little bit of an idea that yields are moving up is the bonds collapsing down. Now listen, bonds go down, dollar goes up, Bonds go down, yields go up. Look at this breakdown. This is a break of a range. Notice if we take a look even at the daily price action event and we draw that box and we use Dolby's range-based formations, we follow in the direction of trend. The short opens up here. We take profit here, and then we let it fade. Always in the direction of trend. It's actually a beautiful trading mechanic. Let's take a look now at our favorite trading vehicles for the day. All right, here we are. Still in buy the dip, a deep dip. Now, you might go, Anne-Marie, look at this fade. Why are you still saying the market is in neutral formations? And it is clearly in a neutral formation because it's in a reversion to the mean. 2 days in a row, I have changed the length, and today I'm just going to hop down to 50, right? Long-term traders taking a look at that line. We just came into it, closed under it, and this is an exponential, so it's going to be a little bit more sensitive to price. The SMA would probably be down here at a lower level. Let's just find that out for giggles. Let's use the SMA. Oh, it's higher. Interesting. That's interesting. However, it's just 1 day of the break. All right. So that's what we're looking at. What are traders going to do? They're going to buy the dip. They're going to buy the dip. Look at this range. This is the one that I am very keen on staring down. And it's the range between 5160. That's one of John Hoagland's lower numbers, I think, 5160 to 5145, somewhere in that squishy spot. That's where we're going to create an alert today. If we get up above there, buyers are going to try and resume trend. Right now, it's in a buy the dip. If we cannot get up and stay up over 5123, 5124, we are likely to fade. Where? To the bottom of the channel. This little box right here gave me my last channel event, and look at that. Yesterday, that's really where we clipped. Fell below it into those 88s, 87s. I think it actually came to 81, to be honest, and now bouncing. But listen, this is a sell the bounce formation, but in the early part of the morning, it looks like a buy the dip because we are inside of yesterday's range and we are pressing into the heavy congestion event. If we go down to the 15-minute and we take a look at what we might want to see, we see clear sideways action. If we draw the range box, we can easily see that down here is where we might potentially buy at the 5103 to 5101, holding that VWAP, right? Maybe let's move that up just a wee bit so we can see what risk is going to look like. It could be very sideways. It's got no real trend. It could be a megaphone event, to be sure. But that is what we are looking at. We do it with the reflection of where we are relative to the tighter trends like the VWAP and that 8. It tells us, listen, we buy the dip and then sell the movement into these upper levels. And I like that one right there at 5124. Going to create another alert. Going to be a very interesting trading day today. All right, let's take a look at, the lines I'm watching. You can see them very clearly. Let's go now to the NQ. And let's take a look at the dailies. These guys are all in mean reversion. This one came in, look at this, lower highs, lower lows, right? Trying desperately to get inside of yesterday's candle. This is the weakest chart that we are going to watch. The absolute weakest. What comes in below here? I have no lines drawn, so let's take a couple of those. I'm going to look at old resistance that became support. And so that bottom line, which I'm not sure that we get to today, we might in times to the future, that's going to look like about 17,700. And then below there, we've got wick action support at 17,558. What do I expect the traders to do? I expect them to try and hold this ledge here at the bottom. Listen, if we can't hold this, these prices are going to collapse into these lower edges. This is a buy the dip, but only into resistance. And we've got these lines here that have triggered day after day after day. It tells us sell the bounce. Okay, buy the dip, but sell the bounce until we lose the low of the pre-market, and then all the bounces get to sell. All right, the dollar is at a 5-month high. It's going to put a little bit of pressure on things like gold and oil if we're moving in normal patterns without the fear of geopolitical risk. And this is what I see. I just see this as a place that folks are fear-mongering a bit and getting traders all bent out of shape because war is coming. And I've got to tell you, the charts are not telling me that. They're not. They're telling me it's in a deep reversion to the mean, and that mean could be the 200, right? Now, we broke the 200 last week in the YM. This one's having a lot of trouble, folks. This is sell the bounce. You know, I've said this is a sell the bounce rally, but sell the bounce movement. And so here is old resistance to the left, new support. Well, what do you know? Here we are. This line right here at 37,985. Going to create an alert. We lose that level. Bounces are likely to be selling formations, but take a look at what the YM has done in the pre-market. It has engulfed the body of the prior day, and indeed, it's above the open of the prior day, and so that line in the sand is now here. As long as we hold 38,217, they're going to try and walk up this wall of worry. If news comes in, makes them afraid again, they're going to sell. I believe it's a sell the bounce event. If it gets up above 38,217, it's still a buying pressure event until this absolutely monstrous heavy congestion fades. Our key support lines have been broken. We're now looking at 37,900. That also has been broken. So we are going to see 37,900. Yes, it broke it. So now we're going to see how well we can lift off of those edges. Last in the futures, RTY. This one, I believe, where's January? January 1. This chart is now flat for the year, which is why we saw the buyers try to come in. But take a look at this pre-market, right? As the bonds go down, this is going to follow in line with that 10-year, with the 5-year, with the 2-year, okay? Because higher rates make this very unattractive. Okay, that being said, key support lines broken long ago. That's up above the 2000 area. We tried to recover it yesterday, absolutely faded. If we can get up above 1993, there might be some buyers sitting around there. I think it's a sell zone. Okay, so for those of you trading the RTY, that is the region that I'm looking at. We're going to put an alert there. It could fly over that round 2000 number, but it's likely to fade. And it's going to keep fading until these bonds stop moving down. All right, now let's take a look at SPY. For those of us that trade these, notice again, I have neutral state. Why? Look at this beautiful S-curve test. Absolutely fantastic. There are going to be buyers floating around here, and you can see why this line is so important. Listen, if we break this, we are headed to 500. This is my thought. Headed to 500. And at that juncture, there is a gap here. At that 500 number, I'm going to put it here. And then below that, we've got our 495s. All right? Now, we do have a put butterfly in here that's going to do dramatically well if it fades into this region. We'll just watch and see. We've got time on our hands here, but these formations are doing exactly what I thought they would, coming into heavy congestion. This is the region that I think we ought to stay in for the whole summer. If we break, it's going to be a little bit harder to hold those edges because the next line for key breakout formations becomes this area at 483 and then this area at 477. Chances are traders are going to try and buy the dip first. Up into resistance, 508, 509, maybe even 510, but I really don't think so. We buy the dip in here, watch it come into resistance, and then we sell the fade. Side note, if we're taking a look at this range action, we can't really see anything here except This formation right here, it's got a downward sloping 50, an upward sloping 8, so it's going to play ping pong in here, is my thought. All right, lines in the sand, I've already talked about them. 503 on the downside, 508 on the upside. Don't try to short if it gets up over here and doesn't immediately collapse. It means that short sellers are either flat-footed or buyers have said, I am not missing out on this next rally. Lastly, the Qs. We know the Qs are the weakest in the range. Key support, 435, broke through it yesterday like it was nothing, and now the traders are trying to hold 431. What's the next range? Look, it is super messy. Super, did I mention super? Super messy. And so the next line we have is 428. It bounced just off of that. Listen, if we lose this pre-market low, watch for the traders to either give up the ship and we trade down into the 421 area. Maybe the heavier congestion might be 424. I like that number. And then they're going to try and buy this bounce again, right? I'm going to put an alert on 425. These range supports have been actively broken. We're now looking at the key zone at 428. Our key support line is 428. All right, listen, that's it for me. Remember, these range trades look really nice, and you can use that strategy. Although there'll be trades in the futures, you can use that strategy anywhere. Just remember the following. You look for sideways basing, you look for the direction of trend, and then you take the trade within the range in the direction of trend. So if we're looking at the Qs right now, it is clearly in a buy the dip formation. Here's the rub. Look at how big the wick was. It went into the third candlestick when it's got upward pressure, right? And so we have this cross current coming into play. Let's see if we move that back to 30, what that looks like. And we can see that the traders are desperately trying to buy the dip on these tighter time frames. They really, really are. But nothing is giving them the power to do that. The great big range says, I'm moving sideways, but trying to hold the floor. All right, that still gives us, if we trade on the 30, we go, I'm selling the top. If we trade on the 8, it's giving us sideways pressure all the way down to 429. Hey, have a good day today, folks. Be alert. You know, I'll be very active on the Benzinga Pro platform this morning. Stay frosty.